In this video, we're going to talk a little more about our pivots retracement workspace and some things that we're doing with this to help us identify higher probability trading opportunities. Briefly, each of these charts in the workspace have a slightly different definition for the pivots. If you want to know what that definition is, you can either look at the indicator or just look right here at the workspace itself, and it'll tell you that. In the upper line where it identifies pivot low as well as pivot high, that's your definition. So it's a 15 bar left strength, 5 bar right strength. That's for the TradeStation pivot definition. Okay, and then that is reflected in the indicators themselves. Each workspace, each chart has two ESJ indicators in them. One has a letter to it, and that letter is there for the purpose of the strategy. So if you're not using the strategy, don't worry about this. But that's for the strategy, because we use that letter to identify which of the Fibonacci definitions we want the strategy to work off of. If there is an X here, all that means is that the data is simply being plotted. So for example, for our retracements, we have all 7 Fibonacci retracements, including the 100% line, showing up here. We set this to true, and it will draw the Fibonacci retracements so long as there is at least a 2-point move, pardon me, not a 2-point move, a 2-tick move between the pivots. Both upper and lower retracements show up according to these definitions. So, in other words, when you're running a retracement from this line here at 100% up to here, the retracement down, which is showing as your yellow lines, you know, 50% retracement would be at 1475. A retracement from this point here, from this high to this low, a retracement back up is in cyan. When you're looking at these retracement lines, it says nothing about market direction. Do not anticipate that just because you've got retracements that are showing up exclusively as yellow lines, that the market is necessarily moving up, or that it is necessarily moving down. It just means that that is what the available Fibonacci numbers are for the retracement based upon the definitions. You cannot say anything about market direction just because you have Fibonacci lines available. So, getting back to our definitions, we've got 6 different definitions. This is, for example, chart 1 is using a 500 tick bar, whereas chart number 2 is using a 1000 tick bar. And then over in chart number make sure of this. Yeah, this is a 2,000 tick bar, but this is a 1,000 tick bar. So we've just got a variety of different definitions here. Now, why do we do that? Fibonacci, in my estimation, works because it's a self-fulfilling prophecy. You get enough people looking at a particular price or a particular number, and the probability that things are going to change increases. So when I use a variety of different tick bar intervals as well as pivot definitions, and I look at where those pivots are, and look at where the retracements are, I see a bit of a confluence. So for example, let's just see about this. When it came to this retracement between this high and the low over here, our 61.8% retracement turned out to be at 1411.50. Market continued to move down, and it did not pivot off of any particular known Fibonacci number using this definition. The definitions here worked out to be the same definitions in chart number 2, so those Fibonacci numbers were the same. But when you came over to chart number 3, we had a slightly different definition, so that your 61.8 turned out to be at 1425, and it pivoted off of the 76.4 using this definition. Chart number, I think I said that was chart number 3. Chart number 4, we didn't have any pivot that took place there. Chart number 5, same thing here. The Fibonacci number was not hit exactly, but the pivot definition was considerably different. Okay, those are big numbers. So what I will do is when I take a look at my numbers, and you may just want to write this down on a piece of paper so that you know where your numbers are approximately. As I see the market moving down, I already know that 1150, 11, or 1050 could be good numbers, or it could be 1125. So what I'm saying here is, by looking at these other numbers, 1150, 1125, 11, 1075, I've got every quarter of a point being covered here by my Fibonacci numbers. So what it's telling me is I do not have a very solid number to work with. It's really all over the board. So when there's no one particular number that stands out, I've really got to be sure that I've got confirmation when it comes to taking the trade. So if it's going to bounce off of one of those numbers, I don't know which number it's going to be. Chances are it's going to be at least 1150. As you can see, it bounced off of 1075. You know, there was a 3-tick difference. So where did my indicators show me that there was going to be a move? So I'm looking for 1150, 11, 1075, maybe even 1050. So every quarter of a point between 1150 to 1050 was a possibility. So I'm just going to line that up. Let me go back now to my manual trading workspace. Now on my ADV, right, when I was up here at 1150, that was 1175. Okay, at 1150 here, it's coming down, and the AD is not saying that this is a good place to move, right? The other charts are also confirming that. So I don't see a pivot taking place until way down in here. Okay, that's where I see it take place. And there I'm at a known Fibonacci number. So that's why I'm going to say I'm going to look very closely at my indicators and make sure that they're agreeing at the time that I take the trade. I want confirmation. So once again, when you're looking at your pivot retracement, know your numbers. And if you've got some solid numbers, wait and go with them. If you don't, know what your numbers are, but by the same token, you want to have strong confirmation of that once you take the trade. Now there's something else that I've done, and I only do this on maybe one chart at a time. I may also choose to draw manually a very large Fibonacci retracement. And I do this manually because it's just too much of a bear to try to do it by way of setting up my pivot definitions. So for example, we had a high at 1419.75, and the big low that occurred, which was quite some time before that, was at 1332. I think it was 75. Now, that's not even showing up on the screen because it was a historical low. But we'd have to go back. Let's just take that couple of months. Okay, so for example, I'm going to go back and look at a big significant pivot, and that occurred way back on March the 6th. The low hit 1332.75. Since then, it has not gone lower. So what I'll do is I'll take my Fibonacci drawing tool. I'll take the drawing tool and I'll enter into the drawing tool those highs and lows. And that way I've got a big Fibonacci number that I can expect possible changes to the market direction may take place when we hit those numbers. All right, so my nearest really big number is at about 1409.5. and we're at 1075 right now, I'd say we have a real good chance that that number is going to get hit, maybe exceeded. And I know that also because here at this particular high, between that high and a known low pivot from yesterday, 1409.5, turns out to be a 61.8% retracement. So are things going to happen at that number? I don't know, but I think there's a strong probability. So taking a short and holding it, hopefully without getting stopped out, down to 1409.5, pretty good shot. Pretty good shot. That's going to happen. Okay. Now we'll just take a look at this chart as well. And you notice that the retracement between the high and the low of this day, that retracement didn't take us up as far as 1375. It looks like it didn't even make it to 13.25. Then maybe it did. Let's just look. Yeah, 13.25. Could we have known that? Well, let's go back. Let's look at this chart here. Now you know that the way the automated retracement tool works, you can redraw historically your Fibonacci numbers by turning on the analysis commentary window. That's right here. Now I've got that set up with a macro using Shift A. So in my case, all I do is I go to Shift A, click on any bar I want, and it'll tell me what the nearest Fibonacci numbers were based on the definition used in that particular workspace. So between this high, 1375, and that low at 1410, that move up to 1325 was an 88.2 retracement. So it was a known number. Okay. All right, so that pretty much covers what we're trying to accomplish with this workspace. It's just to give us some numbers. You may just want to write them down. Write down your big numbers. And look for good opportunities to trade. And it looks to me like we're now going to go right into that, that larger fib number at 1409.5. We're probably getting close to a pivot on that as we speak. So it's fairly easy to use. Just know what your numbers are, right? And then watch your indicators. If you've got big numbers, you don't need quite as much confirmation. But if you've got lots of numbers, every quarter of a point, for example, then you definitely want to get plenty of confirmation before you take that trade. Now, as long as this is a live video, we're just going to wait for a second because we're right there at that 1409.5 mark. Let's see what's about to happen. Let's go over to our indicators. as we move into 1409, we've had a new low on the premium. Well, a relative low. I'm not sure that that's a new low. But the premium spiked down nicely. The AD is continuing to drop. VIX is continuing to move up. We're at an extreme on the tick, an extreme on the tick of the S&P, and not so much on the Russell. We got a pivot off of 1409.75, but notice no pivot on the VIX. VIX has not pivoted. It's close. Standard deviation of 1.42. That's way up there. So it looks like it's getting ready to change direction. But I'm not ready to jump in on a long trade. And neither would I be if I was trading manually. I wouldn't really be ready to get out of a short trade just yet. Give this a little bit more time. We'll come back in a minute. Now, just to comment for a moment, the VIX made just a little bit of a dip right in here, right? But now you can see the VIX is moving back up. All right, so this certainly didn't occur at the moment where we hit 1409.75. The VIX is still moving up. So I'm not confident about that number. We'll need to give this more time. This market should come down. Let's talk about that move. Okay, this market is not done moving down by any stretch. So you can see right now your VIX is continuing to move up. The AD and all of your other data feeds were sloping down right in here. Now, the premium hasn't shown up on chart number 1, but you can see that it's showing up on chart number 3. At least it was at, well, it's still ticking down. So you could have shorted that, right? You could take a little short there. You've got a high probability that this is moving down. 1409.5. There's about a point there. So we'll just give this some more time. All right, let's go back to the chart again. We talked about this coming down, possible short there. And just analyze this with me as we go along. Now, you know, again, your standard deviations of about 1 to 1.5 are typical before the indicator, the underlying indicator, is ready to move. We're looking at 1409.5. Now that would turn out to be a new low for the day. That's going to happen. The pattern would suggest that without anything else to worry about. But just to give you an example of where we want the indicator to be. Now here we're at 1409. just look at where our indicators are. Just look at the right margin here. We want to be at a standard deviation of at least -1 before we even think about getting out of a short trade here. The tick, for example, is just moved up. Okay, so we're clearly not there. So let's wait till this comes back down. We'll come back. And we're just going to comment on something that we see happening here. We haven't quite moved down just yet. But you notice that, and look carefully at the premium here. The premium momentarily dropped below the zero line. That caused the strategy to take a short trade. The premium, however, has come back up above the zero line, and it's sloping up. So anywhere in here, having taken a short trade, got to be really careful now. Market could very easily continue to move up. So this would be a good time to reset the stop, maybe move it closer to break even. And because of where we're at right now at 1410, the highest move was 1411. That was a known Fibonacci number. But looking at where the market is in relation to the standard deviation on our indicators, we've got to be concerned that if we're fairly high here, 1410 to 1475, if the indicator now moves up, it's got a ways to go before it hits a maximum standard deviation above the zero line. That means that this market could go up, as you can just see it just popped up to 1411. It could continue to go even higher. So it's a good thing, watch these indicators carefully, know the impact that the indicator will have on the moves of the Spoos based on where the indicator is now, right? Sloping up below the zero line and you're already at 1410, it could go another quarter of a point, half a point above that, maybe even more, and stop you out real quickly for a loss. Here's a quick look at where the fib numbers are. $14.11 1/4, $14.11 1/2. All right, $14.12. So given that you're at 14.5 now, you were just looking at these numbers, you've got every quarter of a point all the way up to 14.1275. Every quarter of a point is being touched. 14.10, 14.1050, 75, 11 over here, 11.25, 11.50, 11.75, 12 over here, 12.25, 12.50, 12.75, every quarter of a point. All right, you've got nothing clearly defined here. 1412 on chart 6 is a big number. So you might expect that this could very easily move up to 1412. And notice what also happened to the VIX. Okay, the VIX, as we had been talking about, had gone, as far as its standard deviation, way up there at 1.4 or better. starts to move down, and that's going to take the market back up. But I want to give you a little bit of a secret here on the VIX. Having studied the VIX for many, many years, one thing is very true about the VIX. 90% of the time, maybe even better, the VIX will be at a new high when the Spoos are at a new low. As a general rule, if the VIX is not at a new high, that's relative to the day that you're looking at, when you're at a new low, then chances are you're not at a new low yet. That will correspond very, very well. Now, if you are at a new low on the Spoos and the VIX continues to move higher, you may consider that to be a divergence, where the VIX becomes overextended to the upside, and now you're at a higher low on the Spoos when the VIX finally turns. That happens, but not as frequently as the other rule. When it does occur, going long will generally make you a few points. But you also want to consider this in relationship to the pattern of the day. Today, that low that we just hit is in all probability not the low of the day. So this little divergence in the VIX, wouldn't worry too much about it. I would still be looking to take a short trade, but not yet. Got a little further to go on the VIX. Look at where the Bollinger is. Look at where the standard deviation is on the Z-score. Market's still going to move up a little bit more. Here we've hit 1475. Excuse me, 1411.75. And we're probably going to 1412 or better. Got a little bounce here off of the VIX. I'd expect this to go all the way into the Bollinger. It's not there yet. However, okay, just a reevaluation of this. We're at 1411.75. The premium is just dropping below the zero line. And we just came off of, let's just look at this. Well, you were pretty high on the AD, not that high, really, not that high on the tick data feeds. I think we have more to go. Yeah, look at that. You're at 1411.75, and on the tick of the Russell, you're way below the zero line. Okay. Shouldn't be that far below. That would be very dangerous to take a short trade right here. Okay, we'll come back. We're going to take a look at this again. Look at the VIX over here. VIX is sloping up, and all our indicators are here moving down again. So taking a short trade here, right? Taking a short trade in this instance may look like it's a good idea. But what is the danger is the fact that we've moved off of, we're slightly off of the high there at 1175. And because the indicators are sloping down, but they are already below the zero line, almost by their maximum standard deviation, it looks good, but there's a very strong risk here. Now, the thing that has got my attention is the fact that the VIX has not come back and moved into the lower Bollinger, and it's sloping up. Sometimes this will in fact produce a short, but this is a dangerous time for a short. It really is. It looks good, but it's dangerous. Let's just put it that way. Very easy for things to turn and take you right out of a short trade. So what I'm going to do here is I'm just going to put I'm just going to manually put an arrow in here. Okay, right there. That's where it, well, not quite there. That was on the next bar previous to that. Let's just expand that out. Yeah, right in here. I'll just say it. That's where it looked like, things might happen here. And they may, but by the same token, it's a dangerous time for a short. Yet sometimes it's when it's the most dangerous, that it in fact turns out to be the most profitable. So yeah, that's where some real discretion comes into play. Personally, too many other good opportunities to trade. I would not want to take a short trade right here. All right, we'll come back. Yeah, I was just going to say, this is going to go up to 12 or better. And you saw that particularly right in here on the VIX. Still has some distance to get into the lower Bollinger. As it moves down, Spoos move up. So although we're likely getting closer to a short trade now, $12.25, 12.5. All right, 12.5, 12.75, 13.25 is already 100% retracement from those pivot definitions. 1350 could be another good number as shown by our other retracement over here. Let's look at this here. Yeah, 13.5 looks like a good number. Boom. See that? Now, incidentally, something to watch for, we've got a big retracement here. $13 was your pivot. Or 13.25 was your pivot, is what I was saying. And it is not unusual for a retracement to come within 1/4 of a point. 1/4 of a point of your recent pivot, and that's as far as she'll go. You'll hit the resistance level. Before you get there, things will turn and the market will start moving in the opposite direction. That was your VWAP. We haven't talked about that. But now look at where we were right there. And we were up there at 13. Okay. Right up here at 13. And your indicators were all going south. Shorting it there with a stop at 13.25, or pardon me, at 13.5 would make some good sense. And that was pretty much meeting all of your definitions, with the exception of the premium. Premium had not changed in this on this particular chart, on chart number 1. Premium had not changed. Slope was down, but it hadn't dropped below the 0 line. And now it's above the 0 line again, and we're back up to moving up. So it looks like we've got a little bit more room to move up before this thing is going to start coming right back down. But in any case, because this video is kind of getting a little long, so I'm going to go ahead and conclude that here. I think we've covered pretty much all of the things that we can cover in this video, and the important points that you want to look for when you're taking your trades. Pay very close attention to where you are in relationship to the z-score and your standard deviations. Watch your indicators. Once you've entered a trade, watch them very closely so that you know what the probability is that you're liable to get stopped out, because you can see that based on the price movement of the Spoos and where your other indicators are at. And make prudent decisions. Watch those Fibonacci numbers. Make sure you know where they're at. So I think we've covered this about as much as we can right now. For the sake of time, we're going to conclude the video, and we'll talk about the VWAP on another video. So that concludes our discussion of our Fibonacci retracements.